Hello people, welcome to Millionaire Nation. Today we will know how people are losing money with the wave of cryptocurrency.
Bitcoin is worthless artificial gold, which if it succeeded would facilitate a lot of...
Some in the industry are now asking, as leading cryptocurrency exchange FTX faces bankruptcy after failing to secure...
Litecoin just a little bit higher, but we're looking at Bitcoin, Ethereum, and of course you can see the U.S.
announcing the arrest of the majority shareholder of an overseas cryptocurrency exchange. He's accused of facilitating the...
Before getting into cryptocurrency, let us understand the concept called blockchain, which cryptocurrency relies on. The blockchain consists of a network of computers connected together. These high-end computers are called as nodes. Each node has its different tasks to do. Combining together all the nodes in a network is called a blockchain. Let us take an example of a transaction to understand blockchain better. Imagine there are two friends, Alex and Bob. Alex wants to send money to Bob by using blockchain, so the transaction goes through a node of the network and verification happens, like whether Alex has the required balance in his account. If it does, then the money is sent to Bob. After the transaction is done, it is saved as a separate node in the network and added to the existing network in the form of a hashcode. Hashcode is nothing but an encrypted form of a transaction saved in the form of a string. Now let us assume that Alex wants to send some more money to Bob through the blockchain. So after the transaction is done, another node is created. This node has the data of the previous transaction and the present transaction as hashcode. If the number of transactions increases, the capacity of the network increases and also size of the node increases. Many nodes will be created with all the previous transaction value copied and with present transaction value. So it will be very tough for a hacker to hack a blockchain because even if he deletes a transaction from one node, the rest all will have a copy. That's how the blockchain works. The money which we can send through blockchain doesn't work in USD. There are separate currencies operating blockchain. The main one is Bitcoin. There are many more currencies such as Doge, Moon, Ethereum, etc. Each has a separate blockchain system they are running in. Number of nodes increase in blockchain depending on the popularity and also people using them. Let us know more about Bitcoin and go deep into it. Bitcoin was created in 2009 by an unknown person or group of people under the name Satoshi Nakamoto. It was created as a decentralized digital currency, which means that it is not controlled by any government or financial institution. Transactions are recorded on a public ledger in the blockchain, and anyone can participate in the network by running a node. If a specific computer completes the task of verification of the previous transaction and adding a new transaction hash code into node network, it is rewarded with a bit of Bitcoin amount and added to its digital wallet account. This is how new Bitcoins are born, and this process is called as crypto mining. Due to the popularity of Bitcoin, it became very tough for a normal computer to verify millions of previous transactions and add a new transaction to its node. So they started using supercomputers in them to do all the complex calculations. Because the blockchain is decentralized, there is no central authority that can manipulate or alter the data on the blockchain. All transactions on the blockchain are public. Anyone can view the transactions that have occurred on the network. However, the identities of the users are kept anonymous. All the transactions in Bitcoin, such as money transfers, happen using private keys given to a specific user while joining the network. Any person can send money in the form of Bitcoin, keeping another person's private key as the destination for a transaction. If you've watched this far, thank you so much from the bottom of our hearts. If you think we've been worth your time, please click that subscribe button to give us the confidence to make more videos like this just for you. And also click that bell icon so that you get notified when we post another video for you. Let us get back to our point. Blockchain has many uses despite only handling in the finance space. In supply chain management, blockchain can be used to track the movement of goods from the point of origin to the final destination. By recording the location and status of the goods on the blockchain, supply chain stakeholders can ensure that the goods are authentic, safe, and ethically produced. In voting, blockchain can be used to create a transparent and tamper-proof voting system. Each vote would be recorded on the blockchain, and the results would be publicly available for anyone to verify. This would create a more secure and trustworthy voting process, reducing the risk of voter fraud and manipulation. Estonia was the first country to use blockchain in its national voting. In healthcare, blockchain can create a secure and transparent system for storing and sharing medical records. By using the blockchain to store medical records, patients would have more control over their data and would be able to share it securely with healthcare providers. In spite of all the good things about blockchain, some people are using it to steal money from innocent victims. Let us know how blockchain is being exploited. Anonymous transactions. Due to all people on blockchain being anonymous, smugglers and international terrorists are using blockchain to transfer money anonymously. The government also doesn't have any control over money upon a blockchain, which is also a major threat to the economy. Trading. Bitcoin is a highly volatile asset, meaning its value can fluctuate wildly in a short period of time. Some people try to profit from these fluctuations by buying low and selling high. However, trading Bitcoin is extremely risky, and many people have lost a lot of money trying to do so. No regulations. Since Bitcoin is not controlled by any government or financial institution, there is no oversight to protect investors. This has led to numerous scams and frauds in the cryptocurrency industry. Let us know it with an example first. A group of people create a crypto coin on blockchain and increase the price artificially by building a community around it and promoting it to the community. When the coin is at its peak price, the creators sell off their coin holdings and vanish. So the people who invested in the coins are fooled and will lose their money. The same things also happen with NFTs. NFTs are nothing but digital assets such as pictures, in-game assets, etc. These are used as a replacement for currencies in the blockchain. Firstly, they create a community around the NFT collection and hype it up. The founders sell their NFT and vanish with money, and the people who brought the NFTs in the auction will lose their money. In our view, if an NFT is tagged with a real-world physical object, then it would be more valuable. For example, if a person brought a super rare Rolex watch, if he is given an NFT which is super rare and have only with the people who own the watch, then NFT will have a value. But now, in the present situation, no company is trying to bring value to end customers. If they buy an NFT, they are just looting consumer money and making a Ponzi scam by artificially hyping the asset price and cashing off. It is also very tough for IRS to track the cryptocurrency holdings and NFT holdings with an individual. So it became very tough to bring regulations from the United States government upon cryptocurrency. Before investing in crypto, make sure you are investing in an authenticated and stable coin, or else you may lose your fortune. That's all for today. Also, if you want to know how people are losing their money in the biggest jackpot scam ever, please click this handpicked video just for you. Thanks for your time.